What are you saying, people? TWP back with a bang. Here I am to talk about what I've learned from the past, almost 7 years of trading. So in this video, I'm going to talk about everything I've been learning, as much as I can remember from what I've learned. Might be a little bit of a long video, but then in that case, just put the video on, do something while you listen, throw your AirPods in while you're cleaning around the house or whatever. But obviously I'm still a young trader, so it's a bit like, I've learned all these things, but there's so much more to learn. But like I said, I just want to talk about that today for those of you who are beginners, those of you who have maybe not traded as long as I have. So before I get into it today, please just do me a favor, drop a thumbs up. It's definitely appreciated. These videos take time. And share them with a friend. It could help someone else. Share them with a trader, share them with whoever. And make sure you also subscribe if you're new around here. I definitely appreciate that as well. I started my trading journey with money in the market the first week of February 2018. So that's 6.5 years ago. I feel like there's two different types of people when it comes to the market. Those who study and they know what they're doing, but they're a little bit hesitant on putting their money in the market. And those who are just like, let me get right in. And usually they lose a little bit. To start off with, when you're starting out, I definitely recommend you have some kind of income. The reason I'm saying this is when I started out, most of you know I started with a $75 portfolio. Having a two-figure portfolio is kind of nuts. It's kind of nuts, two-figure portfolio. For those of you who don't know what two figures is, that's anything less than $100. So started out with 75, cool. I turned it to 141 within, I think, 2 trading days. Very impressive. But then to try and get that to the next level, you can't really do a lot. It's not easy. What I learned from that is you should have some kind of income. When I did have some kind of income, put a little bit more in the market, buy some AMD here, $25, buy some Facebook, $130. A little bit easier, right? So I definitely say starting out, especially, have some kind of other source of income. Don't be the guy who rocks up like I did, no income, just like, yeah, I'm about to smash these markets. It's tough and you're restricted. Another thing I've learned though, is trading can be extremely rewarding. It can be rewarding in so many ways. It can help you travel. It can help you meet new people. It can help you learn more about yourself. It can just help you grow as a person. It's not only about the great returns. It's not only about the double ups or triple ups on your money. It's not only about that, but it's also about how rewarding it can be in terms of life, helping you travel. Like I said, helping you meet new people in different communities. I've been in a few different discords. I run my own now, and the amount of people I've met in these discords is impressive. You help more people. It's all really nice. But trading journey is very rewarding when you do it right. So I definitely say I've learned that, Then, of course, the most important thing, the losses. I feel like that's the most important thing because it teaches you to learn. The amount of losses we take in the market is quite frightening. But when you learn how to cut those losses, limit those losses, not bag hold, when you learn how to take a 10% hit and say, you know what, I'm out, you're better off to doing that than letting it run to 70, 80, 90% down. That's gonna hurt you. I've been there. Those of you who are in my Discord, you've seen when we try and trade stuff closer to earnings or closer to expiry and it goes the wrong way. Yep, those contracts are going to die. And if you're unlucky enough to trade from a Thursday night to a Friday night till expiry, your contracts might not even be sellable. They're just going to sit in your portfolio, stare at you, and you can't get rid of them. Then I do want to talk about the amateur mistakes. There's so many amateur mistakes we're going to make. I've been in this journey. You recover. Amateur mistakes such as putting too much money in. Amateur mistakes such as over-leveraging. Amateur mistakes as buying a call instead of a put. Amateur mistakes come clicking the wrong buttons. Instead of buying a stock or buying an option at market price, you go and put a limit price way lower than you should, or way higher or whatever. But I would definitely say amateur mistakes are going to help you grow. It's part of the learning process. When I was trading penny stocks in 2018, I made some amateur mistakes. I put my money into stuff that quadrupled in a day. And I thought, all right, let's get to the 10x. Let's get to 20x. Amateur mistake. What makes you think it's going to just run forever? Now, if you're doing an AMC or GameStop, yeah, that might happen. But still, how long is it going to happen for? Another thing I learned from the past 6-7 years of trading, one of my favorites really, you have to diversify. When I was putting money, I think 2021, when I was putting money into tech companies, growth stocks, energy, 2-3 years later, I'm like, oh wow, well, I didn't expect the energy sector to be up that much since then. I didn't expect tech to be up that much since then. I was expecting the growth stocks to be up, those kind of things. But that's why you diversify. If I put all my money into the growth stocks saying, you know what, the Russell's going to run the next couple of years, you're going to see all these small caps boom, well, I'd be sitting with a very horrible portfolio right now. What did I do? Diversify. Money into energy. Here, some ExxonMobil. Money into tech. Here, some AMD, some Tesla. I honestly think that those of you who are starting out trading need to focus on diversifying first. What else I learned over the past 6, 7 years? Dollar cost averaging, DCA. Dollar cost averaging. We all think we know the ideal price point. My support level is here at $113. My resistance level is $119. I'm going to buy when it dips to 113. Oh, it dropped all the way to 101. Now what do I do? Well, I like these shares, but I don't know. What's going on there? If you like those shares at $113 and you like them for the long term, why don't you like them at $101? If you like the Air Forces at $117, why do you not like the Air Forces at $99? Does that make sense to you? Dollar cost averaging was going to help with that. I'm going to buy Nike shares at 73. Oh, it dropped to 70? I'm going to buy Nike shares at 70. It drops to 65. All right, I'm going to get some at 65. Dollar cost average. Don't be the person who says, I'm going to snipe my entry and I'm going to just settle for shares at this price point. No. Trust me, even if those shares drop 20%, but you know it's a company like a Meta, an Amazon, a Google, grab those shares up. When Amazon earnings dropped 9% after earnings, that was the ideal price point to buy. But people were saying, oh, I bought my shares at 180. I'll just wait till it comes back up. No, it drops to 150. Go get some more shares. Dollar cost average. Now, another big thing. This is really important because it's part of the emotion. Emotion is very important in trading. Your trade can control your emotions sometimes. You don't want to let your emotions control your trades. So why do I say your trades can control your emotions? You can have a great day and feel amazing and you're outside, you're eating good, you're having fun, you're talking to your friends about it. The next day, you can lose a lot. You're sitting in your room, you're upset, you're walking outside, you're not feeling good, your head's down, you lost confidence. Trading is going to affect your emotions. It's going to happen. But what I will say is when you're feeling down, when you're feeling out, when you're maybe not having a great day, maybe work is stressing you out, that is not actually the time to trade. That's when you kind of want to wait. Nothing wrong with having the trading affect your emotions a little bit here and there. But when you let the emotions affect your trading, that's when you're going to really suffer. You're going to throw in too much money. You're not going to be able to manage your trade. You're going to be focused on the girl or guy that's annoying you. You're going to be focused on the wrong things and it's going to affect you. I've seen it multiple times with people in my Discord, with people on social media, with friends, with loads of people, which is why it's important you step away. You know how to step away. You have hobbies outside the market. You find other things to do. Don't be that sad person who's stuck with the markets 24/7. Who does nothing outside the markets. Who don't do anything with their friends. Who doesn't get outside. Sometimes it's okay to be outside. Don't be that person. It's not going to help you trading. If anything, it's going to make you worse.